Talk Media Limited, where complex ideas are explained clearly. Hi, I'm TaxMax. Let's break down today's tax topic.
Some groups of companies are allowed to pay corporation tax as if they were one taxpayer, but only if strict conditions are met. A group payment arrangement, often called a GPA, is a formal agreement with HMRC that allows a group of companies to pay their corporation tax together through a single company. Instead of each company making separate corporation tax payments, one company in the group takes responsibility for making payments on behalf of all the others. This company is known as the nominated company, and it effectively acts as the group's tax payment hub. All the other companies included in the arrangement are known as participating companies. Group payment arrangements are optional, but they exist to simplify tax administration for large corporate groups. They are particularly useful where a group is required to pay corporation tax by quarterly installment payments. Rather than each company estimating and paying its own installments, the group can estimate its overall tax position and make consolidated payments. This reduces administrative complexity, avoids mismatches between overpayments and underpayments across the group, and can help minimize interest charges if payments are made accurately and on time. The definition of a group for group payment arrangements is wider than the definition used for group relief. A group includes a parent company and its 51% subsidiaries, the 51% subsidiaries of those subsidiaries, and so on down the ownership chain. Not all companies in a wider corporate structure have to be included. Separate group payment arrangements can be set up for subgroups if that is more practical. Several conditions must be satisfied before a group payment arrangement can be approved. At least one company in the group must be large or very large, and therefore subject to quarterly installment payments. The nominated company must be UK resident, although the other participating companies do not have to be. Each company must be a member of the group at the time the arrangement is entered into. All participating companies must be up to date with their tax filings and must not have outstanding tax liabilities. The companies will normally be expected to share the same accounting reference date. Only active companies can be included. Dormant companies may be added later if they begin to receive income. A group payment arrangement is created by entering into a formal legal agreement with HMRC. The agreement must be signed by a director of the nominated company on behalf of the group. The application must be submitted at least 1 month before the first payment is due, which is usually 6 months and 13 days after the start of the accounting period. If the agreement is submitted too late, it may not take effect until the following accounting period. All payments under a group payment arrangement are made by the nominated company. HMRC issues a specific payment reference for the arrangement, and that reference must be used for every payment to ensure correct allocation. For large and very large companies in the group, payments are made by quarterly installments based on the group's estimated total tax liability. The estimate should be reviewed regularly and adjusted where necessary to minimize interest on underpaid tax. Companies in the group that are not large or very large do not pay by installments. Their corporation tax liabilities are payable on the normal due date, which is 9 months and 1 day after the end of the accounting period. Even though payments are made centrally, the tax liabilities remain those of the individual companies. A group payment arrangement continues until HMRC is notified that the group wishes to withdraw. Individual companies can be removed or new companies added, but HMRC must be informed before the first payment is due for the next accounting period. If a company leaves the group and HMRC is not informed, the group may remain liable for that company's corporation tax. HMRC may terminate the arrangement immediately if companies fail to pay tax, fail to file returns, breach the agreement, or fall within anti-avoidance rules relating to changes in ownership. At the end of each accounting period, HMRC compares the payments made under the arrangement with the actual tax liabilities of each company. This review occurs at the closing date, which is the later of when all companies have filed their returns or the final filing deadline. HMRC issues a notice of closure showing any overpayments or underpayments and any interest due. The group must then confirm how payments are to be allocated between companies. If it fails to do so, HMRC will determine the allocation. If the nominated company believes the group has overpaid before the closing date, it may claim a repayment. However, no interest is paid on early repayments. Companies must also keep HMRC informed of changes in contact details relating to the arrangement. And this brings us back to the fact we opened with. Group payment arrangements allow companies to pay corporation tax together, but only because HMRC imposes strict eligibility rules, ongoing conditions, and detailed monitoring to protect the tax system. HMRC is happy for one company to pay everyone's tax, but only if that company keeps perfect records and never forgets to tell them anything. This content is for education only and is not tax advice. Corporation tax rules are complex and can change over time. Professional advice should always be taken before acting on this information.
Educational content only, not advice. Rules can change. Thanks for watching. Clear explanations, one place, Talk Media.